The markets are in fine fettle, holding on to a flat line where 24,500 is intact. Some more important tickers coming in on your screens from the economic survey. In fact, I'll take the discussion forward. Look at the beautiful broader market rally. The small cap and the mid caps are outperforming, while the large caps are slightly lazy today. But Radhika Gupta is now joining us to talk more about markets. It's clearly a day which could be very lazy. It's rainy outside. Everybody would like to be tucked in their home. Radhika, I'm glad you could make it on a rainy afternoon in Mumbai. But let's start our discussion from select parts of the economic survey which talks about financial markets. Economic survey mentions that financial market correction, if any correction of that sort happens, it could impact household savings, and some speculative money, overconfident speculative money actually going into financial markets is not a good thing. I mean, it's not nudging regarding anything, but we all know what the discourse is right now, Radhika, isn't it? Banks are complaining, flows are going to mutual funds. The regulator keeps on telling us that F&O side of the market is getting overheated, or a lot of exuberism there. You are a veteran now in the financial market. What's your observation of the entire thing?
So I think there has been a lot of noise about liquidity, and there is different kinds of liquidity, and there is a nuance. Now, one is productive liquidity, and I think that is the money that is being channelized into SIPs, into sensible direct stock buying. If that is, it is finally going into capital formation. And in the case of SIPs, I mean, I know people keep talking about our 21,000 crore SIP book. As an industry, it is finally retail investors doing monthly investments that are averaging out market ups and downs. I always say, Ajay, if someone has done a 10-year SIP, it's highly unlikely वो किसी भी fund में कर दे, things are not going to go wrong. So that is productive liquidity that is going into capital formation, that is finally going into companies, that is making markets more Atmanirbhar. Now there is a second section of liquidity, which is the liquidity and the young people, doing what they are doing in F&O. I think SEBI chief has talked about this. The economic survey alludes to this. Should we be concerned about it? I think we should be very concerned about it. I talk to a lot of young people who now believe that trading is actually a full-time occupation. They don't need an occupation when they're in their most productive years of 23, 24, 25, and they can sit and trade. The problem is when you put money into a mutual fund, when you put money into a stock in cash equities, you can't lose more than your capital. But when people start getting nervous about F&O and its systemic risk, because if you put in 100 rupees on leverage, you can lose far more than your capital. And there are some really tragic stories that are coming out. So I think it is right cause to be concerned. And, do I expect some regulatory or tax, news in this direction? I hope so. I certainly hope that there will be something.
Apart from this, apart from the financial market angle, what are your key expectations from this budget, Radhika?
So I think it's a little bit of a kahani mein twist kind of budget, because if you look at the last 10 years, and it is the first budget of the new government, so in some sense what you say now sets an agenda for the next 5 years. So it's an important budget for the headline value. I think for the last 5 years the message was find a balance between fiscal prudence and keep doing capital expenditure, keep building infrastructure, plan for 2047. And I think markets have liked that message. Stock and bond markets have both liked that message. I think the twist in the story this time is you have to do something for the middle class in all of these. Given election outcome, given slowing down consumption, you have to do something for the middle class. And so you have a triangle, and it's a very, very difficult triangle to get something around. So I think the key message and the key lookout is, are they going to continue the first two, which is capex and fiscal discipline? And what are they going to do on the problem of consumption, and specifically the problem of jobs, which is, for me, the big lookout in this budget.
Sure, that's correct. Even economic survey does talk about that. Radhika, you also, apart from meeting investors, meet a lot of businesses of all shapes and sizes, especially mid-cap, kind of mid-tier as well, I'm sure. I want to understand one is market cycle, the other is business cycle. We all know where the market cycle is, but a lot of times we skip where the business cycles are. How are things there? I mean, you are running a fund as well, or launching about a business cycle fund as well. How are business cycles looking to you?
So I think there's been some amount of noise that private investment is not happening, etc. But I think when we meet businesses, there is optimism and there is evidence of capital expenditure of expansion that is happening, but it's happening in a calibrated way. I also, in addition to running a fund, run a business, and I know the levels of expansion happening in our industry. And in any industry that you talk to, in fact, if you look at most capital goods companies, and that was a sector that many of our funds were bullish on for quite some time, you are seeing 20+% growth. You're seeing an uptick in cement, you're seeing an uptick in power, you're importing steel. So all of that is happening. And capacity utilization is high. I think what people have done is two things. One, they are earnings growth has been rising, Ajay, over the last few years. People's balance sheets are very good. So if you look at mid cap companies, if you look at large cap companies, the balance sheets of corporate India are very good, which I think is a very healthy sign. The second is people are open to doing what we call brownfield expansion. Are they doing unbridled greenfield expansion and growth of the 2006 and 7 era? I think less so. And is that terribly bad? I'm not sure. I don't know if it's terribly bad, because I think there is something about consistent calibrated expansion, because promoters have also seen in India the perils of too much debt.
Right. All right, Radhika, we'll let you go on that one on such an important day. Thanks so much for joining us. That was Radhika Gupta of Edelweiss Mutual Fund. But
if you like this video, then like, share and subscribe to ET Now.